most of the traditional investors, and especially the professional ones, the institutional investors, they still have no idea what crypto is all about and what this brings to our society. And if this happens, stablecoin can be the first killer app of crypto. People don't realize the level of activity that this is going to generate in the smart contract platform, and how transformative this can be for Ethereum, for Solana, for actually testing out the pipes, testing out the scalability solutions with real world activity and real world demand. That's going to come at a global scale. Crypto is way bigger than just Bitcoin. The addressable market for what smart contracts can do can be measured in hundreds of trillions of dollars.
What's going on, guys? So I am really excited about today's interview because this interview actually got me pumped up about being in crypto again. As you know, being in crypto has been pretty tough the last couple years, but I just sat down with Samir from Hashdex, which is one of the biggest funds in the world. They have over $1 billion of crypto under management, and they have ETFs in South America, in North America now, in Europe, and all around the world. They have a ton of employees. They are legit. And they are able to talk to institutions and institutional players and investors on a daily basis. And I gotta tell you, I am pretty excited about this because not only did this actually get me pumped up about being in the markets again, but he gave me a new perspective of just being in crypto and what's to come. And crazy enough, I'm gonna tell you this, you're not gonna believe me, but at the end of this video, I actually got to the point where I am thinking that we're still actually early. I know, it's hard to believe, but you'll understand if you watch this interview. So I'm gonna run the intro and we're gonna get right to it. What's going on, guys? It's Louis Raskin here with Crypto Elite, and I am here with the CIO. Is that correct? Of yes. Hashdex? Yeah, so this is Samir Kerbage. If you want to just introduce yourself, tell the audience a little bit about yourself, and then we could get started.
Sure. Hi, Louis. So my name is Samir. I'm the Chief Investment Officer at Hashdex. Hashdex is a crypto-focused asset manager. We founded the company back in 2018 to create investment solutions for traditional investors to access crypto as a new asset class, right? So think about it like the independent financial advisors, institutional investors, asset managers. As they get more interested into the space, they need solutions to trade and to buy crypto without having to worry about all the back office and all the setting up the whole infrastructure to trade their own currencies. And that's why Hashdex exists. So we founded the company back in 2018, and we had like a very significant success outside of the US, where the regulatory environment was better for a regulated crypto asset manager. And right now we have around $1.5 billion in assets under management. We launched the world's first crypto index ETF, the Hashdex Nasdaq Crypto Index ETF, out of Brazil. And that is one of the most popular ETFs in Brazil. We also have that product available in Europe. And recently, we launched the Hashdex Nasdaq Crypto Index US ETF based in the US. The ticker is NCIQ. And that's basically a simple way to get a diversified exposure to crypto for traditional investors trading on the stock exchange.
Okay, so that's a lot of, sounds like it is a way to get people to be able to invest into crypto through ETFs.
Exactly.
And it was made in 2018. So as I was, like learning about this, I have a couple questions regarding Hashdex and everything. Basically, if you go on the website, the main thing that it says is that since 2018, Hashdex has empowered investors around the world to acquire digital assets in a familiar, regulated way. Okay, so what does that necessarily mean? Because the Bitcoin ETF only just came out last year, right? Or is it something as if like the Bitcoin ETF in the US only came out, but there was other ETFs in other countries, and that's what you guys were doing, and that's how it was, able to get investors to go into crypto in a regulated way?
Exactly. So, Luis, the Bitcoin ETF that just came out last year in the US, but we have like regulated asset manager launching ETFs outside of the US for a long time. And Hashdex was one of the first asset managers to launch a crypto ETF outside of the US. So we've been doing this for a while outside of the US. We actually founded a company in 2018 to build ETFs in the US. But the regulatory environment was just not there. The SEC was not comfortable to have crypto ETFs back in 2018, and wasn't comfortable until like the beginning of last year. So that's why we decided to expand our company outside of the US, and we have like a very significant progress in Europe and Latam. And recently, as the regulatory environment improved in the US, especially with this new administration, we decided that finally it was time to come back to the US to build a business in the US. And we launched the ETF, like the crypto index ETF in the US in February of this year.
Okay, that makes sense. So I have a question before we go into actually all of the Hashdex itself. I want to know a little bit more about you and what drew you into crypto, and also, were you part of Hashdex from the beginning, or did you eventually go into Hashdex?
Yeah, so I joined Hashdex in the early beginning. So I'm a computer engineer that always worked in financial markets. So I started my career in high frequency trading, and doing arbitrage on the futures market. I read Satoshi's white paper in 2011, and I thought this was a very clever idea, but I was very skeptical about traditional TradFi markets adopting it. But I started to get involved in crypto back in 2016 when I was working in a project to create a new stock exchange. And then I started to study like how could we use smart contracts and smart contract platforms to basically create a competitive advantage into this space. And then I came to the concept, like I've learned about the concept of a decentralized exchange. And that was mind-blowing to me, like because if you look at traditional stock exchanges, it's a highly complicated business, like requires a lot of collateral, a lot of technology, a lot of people. And you can replace that by a few lines of code in a smart contract. That was a mind-blowing concept to me. So that's when I started to study more and more, to invest in crypto, get involved into the space. And then eventually I met our co-founders here, and we decided to create this asset manager to bring this opportunity to traditional investors, because they had no idea. Just like I had no idea when I first got involved and when I learned about the centralized exchanges and how this could transform financial markets. Most of the traditional investors, and especially the professional ones, the institutional investors, they still have no idea what crypto is all about and what this brings to our society. So we decided to create this company to give our contribution to both like offering access, offering ways for those investors to get exposure to the space, but also with education, helping them to understand the investment thesis around it.
Okay, that makes a lot of sense. I have a question regarding the you said you were doing high frequency trading and things like that, and that has pretty much taken over the traditional markets, the traditional stock market, for a while now, right? Do you see that taking over crypto now, or is it still not, is there still a lot more room before it gets to where traditional finance is, like in terms of trading and the big institutions doing the, high frequency algorithms and everything that they do, split second stuff where they build out these lines that, travel from Europe to New York, or London to New York, under the sea. And like, are they building all that out in crypto, or is it still so new that there's still so much room to grow, like in that regard?
Yeah, no, I think it's both. Like first, like the market infrastructure around crypto is very different from TradFi. So the type of arbitrage opportunities that you have on TradFi, on the traditional stock exchanges, where you have like a data center, and then you have people that have like, you basically measure the size of the fiber optics cable, like to access the net. So it's a very different structure. The crypto market is way more fragmented. It's global in its nature. It's 24/7. So this means that there's way more arbitrage opportunities in crypto. And so because of this, Like most of the players that are the high frequency trading firms that are very active in TradFi, most of them, they're active in crypto now. So they trade crypto 24/7. They do the arbitrage between the exchanges. So they are basically responsible for making like crypto prices moving at the same time in all the exchanges, right? That's why you don't have arbitrage. And if there is any price discrepancies between two exchanges, there's going to be a high frequency trading firm doing that arbitrage. And they're now exploring in DeFi as well. So they're trading on the liquidity pools and AMMs providing liquidity. So this is a highly sophisticated market, but those firms, they are involved in crypto. And especially after the introduction of the Bitcoin ETFs, we've been seeing the quant hedge funds, like the big hedge funds that are active in Wall Street, they're also very active in crypto.
Yeah, that's pretty much what I've been seeing too. The opportunities for things like arbitrage, like back in the day, and even like 2017, 2018, they were huge, and they've been getting less and less and less now because the big players are coming in like hard. So all right, so going into Hashdex itself, there's the NCIQ, and that is the market cap weighted exposure to Bitcoin and Ethereum. And that's what that is. So yeah, how has that been? Was that the first one, the first ETF that you guys came out with, the NCIQ, or just go into a little bit about that?
Yeah, no, sure. So our first ETF was launched in Brazil. Okay, so the ticker is #11, is the Nasdaq Crypto Index ETF. It's an index that we co-created with Nasdaq to be like a Nasdaq 100 for crypto. So it's a dynamic methodology, has a quarterly rebalance process in which new assets might be included if they satisfy the eligibility criteria, and other assets, if they lose representation, they might be excluded from the index. So it's just like a simple way to get passive exposure to the space. Just like if you're looking for technology, you might decide to invest in the Nasdaq 100 ETF, or if you want exposure to the US market, you get exposure to the S&P 500 index through an ETF. We decided to create this type of structure. So this product has been trading outside of the US since 2020.
Oh, okay, wow. That's called the #11?
Yes.
Okay, and that's the top 100 cryptocurrencies?
No, this is currently... it's dynamic, so it doesn't have a number of assets, a minimum maximum number of assets. Right now, it has 9 assets.
Okay, what's the criteria for that?
So basically, Nasdaq runs a methodology, a set of eligibility rules. The asset must be supported by regulated exchanges in the US, must be supported by qualified custodians in the US as well. Needs to have a minimum liquidity, minimum market representation, and then needs to be compliant with the local regulations. So this is basically the filters that they apply every quarter. And as the market evolves, new assets might be included into the index. So after the US approved the Bitcoin and Ether ETFs, we've designed with Nasdaq what we call the Nasdaq Crypto US Index, which is basically the same methodology, but has one more eligibility rule, which states that the asset must be supported by the SEC to be traded as an ETF. Okay, so this means right now that because the SEC has only allowed Bitcoin and Ether ETFs so far, the index is composed of only Bitcoin and Ether. But over time, as we expect the SEC to approve new ETFs and change their stance towards crypto, we expect that more assets might become eligible and might be included into this ETF. So it's really like an evolutive way to get a broad exposure to the space. So it doesn't matter like what happens with the market, you're getting like the full exposure to the assets that can be invested through an ETF.
Oh, okay, I see. So it's going to expand as more ETFs get. Do you have any thoughts on what crypto is probably going to get the next ETF approval?
And so that's the great question right now. Everyone is expecting to see what the SEC is going to do. We have a filing with the SEC requesting to add all the same assets that we have outside of the US in the Nasdaq Crypto Index. So if that filing is approved, then this product will go from 2 assets to 9 assets in the portfolio. Okay, we expect that the SEC would have a final position in this filing in the coming months. And so we would know like whether we can have the same index that we have outside of the US being like readily available for US investors.
Okay, so right now, US investors can't get that index of those 9 cryptos. That's only for outside the US. Okay, right now they can only get the US version, which only has BTC and ETH. Okay, what are the 9 ones that have the criteria outside of the US?
So you have Solana, XRP, Cardano, Chainlink, Uniswap, Stellar Lumens, and Litecoin.
Okay, I think Solana and Sui are probably the 2 on top on my list for the next ETF in the US.
Yeah, but let's see how the SEC is going to handle that.
Yeah. Okay, so that ticker symbol for the US investors, what's the ticker symbol for that?
It's NCIQ.
Okay, so that's the NCIQ. And then there's also something with the trading symbol DeFi, but it said, when I looked at it, it says that that's just a Bitcoin ETF. So
exactly. So
go a little bit more.
So DeFi is the longest running Bitcoin ETF available in the US. So we've launched this product in 2022 as a Bitcoin futures product. Okay, so we had exposure to Bitcoin futures through the CME. And after the SEC approved the Bitcoin ETFs, we converted that to a spot. So it's a simple like spot Bitcoin ETF. But that product has been running for longer than the other products because before spot, it had exposure to futures.
Okay. So it's basically someone could choose this one or any of the other ones.
Exactly.
Essentially all the same.
Exactly.
Bitcoin spot. Yeah. What do you think the hardest part was about getting all these products live?
So, I mean, for a long time, it was discussing this with the SEC, right? And understanding what the rules of the game are, because there wasn't clarity around it. So that's why even like we designed this strategy for this ETF, DeFi. Like we decided to start with futures and then eventually convert it to spot because we didn't know like what was the plan, the SEC's plan around it. And so this was the big hurdle, I would say, back then. And then recently, it's really like the next frontier now is trying to help the SEC to understand crypto indices and what should be their approach towards this. So I think like the big topic in the US has always been regulatory clarity. And finally, I think we're getting like very significant progress out of Washington, D.C. around this.
That's good. So you guys have been speaking with the SEC and
yes,
have noticed a very noticeable shift in tonality and acceptance and basically their willingness to create new on-rails and basically have crypto become the next biggest thing investment vehicle like in the US.
Yeah, we've noticed a very significant shift. I mean, there's a lot of challenges around regulating crypto. It's not a simple task, but what I can say is that like this SEC, they're looking at this very seriously. They're trying to figure out a way that would reach a better balance between investor protection, which is their mandate, and innovation and letting the market decide how innovation should be handled.
Yeah. Okay, cool. So we got the hash 11, we got the NCIQ, we got the DeFi, and then there's a new one, or I think a new one. It says the Smart Contract Platforms ETF. Okay, so tell us about that.
Yeah, so outside, like I said, outside of the US, we have a whole range of products, ETFs, active and passive. And this is one of the products that it's available outside of the US. So it's a Smart Contract Platforms Index. So it basically gives you exposure to all the currencies, all the smart contract platform, like underlying currencies and all the ecosystem around it. So all the infrastructure layer 2 solutions, they're all eligible for this index. And then we have an ETF tracking that index. So this is a very interesting product for those investors that are looking for, a broad exposure to this specific thesis of smart contract platforms.
Yeah. And I was going to ask about what the, criteria is for for those assets. But that's literally just like, what are the biggest smart contracts, assets out there? I'm assuming, right?
Yeah, so it has the same eligibility criteria as the Nasdaq crypto index. So the asset must be supported by regulated exchanges, must be supported by qualified custodian, needs to have a minimum liquidity. But then on top of this, the underlying network needs to support smart contract capabilities.
Okay, so it's like Chainlink, Uniswap, like those ones. And now
those will be applications, so they will not be eligible to the product. So we're really talking about Ether, Solana, Cardano, Sui, and all the projects like Polygon.
Like layer ones that
layer ones and layer twos. Yeah, exactly.
Okay, I see. So right now, it sounds to me like the US is playing catch up to a lot of the world. And right now, if you're outside of the US, that's how you can invest in these. But if you're a US citizen, then it's pretty much you're stuck to the small number of things that you could do. And where would you even invest into these things? Can you just use a normal brokerage account from Fidelity, or just how would someone even invest into any of these ETFs that are eligible in the US?
Yeah, so if you're based in the US, you can basically use any brokerage platform, any trading app that you normally use to trade equities in ETF. You can get access to those ETFs issued by Hashdex. So those two specifically, the NCIQ and DeFi. In order to trade ETFs that we have outside of the US, you need to have an international brokerage account, and you can't be a US citizen. Basically, you need to be based outside of the US, either in Europe or in Brazil. You can access those products.
So it goes by citizenship. It doesn't go by like if you have a passport, like a European passport or something, right? Or
I would say like most of the world, it happens like if you're international investors, they don't care much where you're based. But if you are US investors, then you're basically blocked from trading.
It's been extremely annoying being
the first question they ask is whether you are a US citizen.
I've been trying to get into like pre-sales and early venture rounds and things like that since 2020, I'd say, and it's just been such a hassle to be able to get in. I haven't even been able to because of it. It's been terrible, but it does sound.
Hopefully, that's going to change.
Exactly,
hopefully that's going to change.
Yeah, fingers crossed.
Fingers crossed.
Actually, start getting good exposure. So, talking about macro, just like in terms of macro outlook and trends and things, what macro trends are you watching most closely right now in crypto, and also just global markets in general?
So, I would say when it relates to crypto, there's two very interesting global trends that we're tracking. The first one is the macro environment and liquidity conditions. So if you look at money supply and the money printer, basically, we're back to printing, right? And this is a significant trend. This is a significant tailwind for risk assets, and this is very positive for crypto. This reinforces the thesis for Bitcoin as an emerging store of value, so it's also very relevant. The other trend that we're tracking is the geopolitical shift that we're seeing in our society, right? So we're seeing a world that is more multipolar. We're seeing more fragmentation. Even the Trump administration now, we're seeing that they're accelerating this process of fragmenting the global order with this agenda of making America great again, of reindustrializing America. One of the consequences of this is diminishing the impact of globalization and also devaluing the dollar. So those trends, they're very, very significant for store of value, for non-sovereign store of value. This is very good for gold. This is very good for Bitcoin. And this is also very good for non-sovereign market infrastructure, like smart contract platforms. And then when you look at the specific thesis, one of the theses that we think it's going to be reinforced by this geopolitical arrangement and the vision of this new administration is stable coins, right? So this is one of the paths that the U.S. administration, the U.S. executive branch is seeing to keep the dollar dominance in the 21st century and to keep like a significant demand for treasuries. So that's why they're prioritizing and they're pushing for stablecoin adoptions. And if this happens, stablecoin can be the first killer app of crypto, the first application that we're going to see on our day-to-day lives. We're going to use for payments. We're going to have like, Apple Wallet. We're going to have like our crypto wallet holding stable coins and big banks issuing stable coins. So looks like this is closer than we have anticipated like a year ago. And if that happens, then we're probably going to see like a big shift in tokenization trends. We're going to see more assets being tokenized, more funds, money market funds, equities, all those things being available on chain. And then like after those assets are available on chain, then we have this whole financial system, DeFi, like so we have the decentralized financial infrastructure available to trade those assets. So this is to say that like we're very optimistic about the crypto investment thesis because of the macro environment, because of the geopolitical shifts, and especially now with this new administration and the push that they're making for digital assets. All those factors, they are very positive for crypto.
Yeah, so people are feeling it, the positivity for crypto that this new administration is bringing literally across the globe.
Yes.
When it comes to the stablecoin, do you think that, like, is there one in particular, like USDC, for instance, that's supposed to be like the stable coin? Or do you think they're going to create their own stable coin, like the US government stable coin? Or I've even heard people talk about like the Ripple stable coin and using Ripple net and stuff like that, So yeah. What are your thoughts? Do you think there's going to be one stable coin to rule them all, or do you think we're just going to have a whole bunch of stable coins and use, atomic swap?
Yeah, exactly. So considering how the landscape is right now, I think it's most likely that basically all the banks will issue their own stable coins. And then we'll have like a strong competition on stable coins for payments. And we're going to have atomic swap between those stable coins. So it's probably going to be a very fragmented market. And this makes sense. This is the structure. This is how the banking system should work. And I think that's probably the trend we're going in. We're not going to have like one big stable coin to dominate them all. We might have like niche applications. Like if you look at Tether, like there's a huge adoption of Tether in emerging markets. And we're seeing this like the benefit of being, based outside of the US is that we get to have this perspective, this global perspective. And what we've been seeing now is basically that trade finance and global commerce, a significant part of global commerce has been running on stablecoin rails for some time now. And this is only growing. And as we have more clarity, regulatory clarity in the US, this is going to grow even more. So this is to say that probably this is going to be a very fragmented market. Every bank is going to have their own stable coins, and it can basically switch between them with atomic swaps.
That's so interesting that, that's what you said, because I remember reading something and it almost seems too crazy to be true. You never know if what's true or what's not, but they said that in the beginning of the United States, there were different like currencies, like different dollars for different states or at different banks. And like, okay, so you're that's true then. Okay, what I read.
Yes. The dollar is a standard like for gold certificates.
Yeah, like it started out where there was just so many. It was very, very fragmented in terms of like dollar. We think, the US dollar, but no, there was, for instance, like the Florida dollar or like the Georgia dollar and the Tennessee dollar, and people had to figure out like what one was worth versus another one, at the time. And now because crypto is like a reset almost of like the financial ecosystem as a whole. You could have all of these new dollars the same way how it was before, except with the new technology, it could actually like all equal one thing, or it could all very easily exchange with one another without having to have the ledger, written down manually and things like that. So
exactly. Yeah, like if you look at the big challenge of this private money in the past, in which like every bank had their own dollar bill, is that to exchange those currencies, you basically would need to settle physically. You need to take a dollar bill from New York to Florida if you wanted to exchange, from a New York bank to a Florida bank. And this would take days, weeks. And if you look at this as a global space, it doesn't scale. That's why the centralization came. That's why we created financial intermediaries, central banks, and all those entities to make this process scalable. But now with technology and with blockchain, we don't need that anymore to scale. So we don't need those intermediaries. We don't need the central bank to be like centralizing this in order to scale. So we're basically getting back to like where we were 200 years ago, but now with scalable technology.
Yeah, it's wild. History doesn't repeat, but it rhymes type deal.
It rhymes. Yeah.
That's awesome. Okay, hopefully. Okay, cool. I thought I was lagging there for a second. All right. So basically the macro trends with the everything that we just discussed, the fragmentation, the dollar, the tether, or the multiple different digital dollars, and all of that. Do you have any underappreciated narratives or sectors that you think will, I don't know, maybe define the next cycle?
So the way I'm seeing right now is that this next cycle will be driven by stablecoin adoption, and this is going to drive more tokenized assets, money market funds, equities, and all those things. And I think the underappreciated part of this is people don't realize the level of activity that this is going to generate in the smart contract platforms. And so the level of demand that we're going to have for block space in smart contract platforms, and how transformative this can be for Ethereum, for Solana, for actually testing out the pipes, testing out the scalability solutions with real world activity and real world demand. That's going to come at a global scale. So I think this is going to be probably like a demand shock for smart contract platforms that people are not realizing. And you can see this with the price action, right? If you look at even Ethereum's price action, Ethereum has been underappreciated for some time. And one of the reasons is basically they scale too much for layer 2s, and the demand for block space has basically went to zero, right? So you don't have the deflation anymore. You don't have like the scarcity of the block space, and this has been a significant headwind for prices. But once we start to see adoption of stable coins, and we start to see like us using on a day-to-day for payments, we're going to get congestion all over again, and demand is going to come back. So I think this is really underappreciated. People don't realize like how significant stablecoin adoption will be for Ethereum and especially for Ethereum. Yeah.
All right. So we have an ETH maxi here who's down big on his bags on ETH and needs everyone to buy. No, actually, okay. So from what I've read, from what I've seen, retail and crypto Twitter and stuff just bash ETH, to bits.
Yes.
And rightfully so, because the price has been down only against Bitcoin for the past 3 years straight. Mm-hmm. But from what I've heard through the grapevine or whatever, and there's a great question because you're in the space. That I heard that institutional investors, real money, big money, people from traditional finance, when they think of smart contracts and when they think of DeFi, they're almost, and even just crypto in general, they're almost more excited about Ethereum than almost any other token out there. Would you say that that's the case? Or are there people also being like, no, man, Solana, and I'm talking about institutional people. I'm talking about the big money, the smart money type deal, not like retail, Solana is the best in the trenches type stuff. No, I'm talking about the people who are building and part of the current system. Do they are they just like really into Ethereum and talk about Ethereum, or do they also mention and talk about Solana or Sui or other layer 2s as like potential on ramps for like, you know, all of that money that's going to be coming in once we get these stable coins, the infrastructure down, and the use cases like actually there and showing that it could be used and it's real?
Yeah, no, so I mean, this is a great question. I would say probably like 80% of what we hear, people experimenting on and really planning to build things on, it's on top of Ethereum, because it's very well tested, it's very scalable, is pretty decentralized, and has this like scalability potential for layer 2s. And layer 2s is something that financial institutions appreciate, because they can create their own layer 2s and their own guardrails and their own rules, and they still are compatible and settle on the base layer. So this is something that they appreciate. So there's a lot of excitement around Ethereum, of course. Recently, we've been seeing some excitement on Solana, and especially for, I would say, high frequency application, like applications, especially in financial markets and derivatives that require like a very low latency transaction finality. So there's some excitement around Solana, but really like beyond Ethereum and Solana, like we haven't heard much.
Okay. Yeah. My thesis is that base network is gonna eat everything, but that's part of the Ethereum base network, you know. But yeah, that I think base just because Coinbase and obviously Coinbase.
And but also the other point that I like to mention is that it's too early to pick the winners. Okay, so we are like, when we look at smartphones platforms, I like to compare this with the internet in the 90s. Okay, so we are in the very, very early beginning. Everything that we talk about adoption is like potential future adoption. It's what's going to happen once like a financial institution start to build on top of those smart contract platforms, etc. We are on the verge of this happening, but we're not quite there yet. So it's too early to pick the winners right now. Any assessment that you make right now, it's basically on early stage testing by retail investors, testing with meme coins and all those things. So this is really experimental. The real usage hasn't come yet. So it's too early to pick the winners. And I like to compare this with the NASDAQ 100. If you look at the top 10 holdings of the NASDAQ 100 in 1999, only one stock is still holding the top 10 position right now. It's Microsoft. And from the top 10 holdings of the NASDAQ 100 in the 90s, 2 or 3 of them went to zero, went bankrupt in the last 20 years. So this is to say that if you look at the top 5 assets right now in crypto, and you look at this again in 5 years from now, this is probably going to look very different than it is right now. And that's why the index thesis, it's something that really catches the attention of institutional investors, because they don't need to necessarily pick the winners. They know that crypto is here to stay. They know that this is a long-term trend, and just buy an index and make sure that you get a broad exposure to the space. So this is a thesis that has been resounding very well with professional investors.
Nice. Yeah, I'm sure, especially outside the US, it's probably been an absolute hit.
Yeah.
Awesome. All right, let me see. Man, yeah, this is pretty cool. All right, so here's something. So Hashdex's global positioning, right? It's Hashdex, it's based in Brazil, right? And but it does operate globally. So what's the biggest difference between, let's say, like LATAM and US crypto investment landscape? Is it basically just like LATAM is way more lenient and just allows you to do more, and it's easier to create products and that? But that's the obvious one. Also, though, are people in these other countries, other continents even, are they coming to you with the same amount of like vigor, like wanting, desire to get into this? Like what's that across the different continents? Because that's something that you would know that other people wouldn't know.
Yeah, so Hashdex is a global firm. So we have offices in Brazil, in London, in Switzerland, in New York. So we have this benefit of getting like different perspective from different like regions. And what we see so far is that like Brazil has a very advanced regulatory environment for crypto, and this is because the demand here has been huge. Okay, so demand from basically like you can think about retail investors, but you also can think about financial institutions and international commerce. Like the demand for stable coins has been huge. So there is a regulatory framework here for regulated asset managers to build a business. And this has been the region in which we have made the most progress with professional investors. Like 80% of the financial advisors in the country, they invest in one of our products. So we have a very deep penetration.
Wait, did you just say 80% of financial advisors in Brazil like invest into a Hashdex product?
80% of the firms, the investment advisory firms, invest in one of our products, yes.
I mean, that's pretty wild.
Because like we've been around for a long time here, like 7 years in the country. We have a regulatory environment that will allow those guys to get involved into the space. So we have the benefit of being ahead in the US. So we know how this is going to play out in the US once the regulations allow. We know like how like the investors are going to behave, you know, once the regulatory you know, blockers are lifted out. And we've been seeing that in Switzerland as well. Like Switzerland, like there's a very advanced private bank ecosystem that's I mean, they're being very progressive towards crypto, and they have like embraced this technology in some sense. What we see in the US right now is that investors are starting to get involved. They're starting to see that this is not going away. Like when we talk with traditional investors, there's no, this is not going away. And I mean, people outside of the US have been realizing this for a few years because we've been using stable coins, you know, and all those different things. But this is finally coming in the US. So I would say like the US is the largest capital market in the planet, and you can see this by just the huge demand for the Bitcoin ETFs last year. But when you look at adoption and how traditional investors perceive crypto, we're probably 3 years behind what we see in Brazil and what we see in Switzerland.
Wow. Okay, so they're really into it then in Brazil, and they're pushing hard in Switzerland and other places, and now finally the US is catching up. And then once we get the regulation and you could add more cryptocurrencies to the ETFs, then that could give Hashdex a little bit more of a advantage in the US, because you already have, you know, these in other countries. So that would be good. Awesome. So one thing when it comes to, you know, indexing and diversification and education, how should newer investors think about diversified exposure to crypto versus just buying Bitcoin?
That's a great question. Like the core of our thesis here at Hashdex is that crypto is way bigger than just Bitcoin. Bitcoin is the first application. It's been running for 15 years. It's in this prime time right now because of the macro environment, because of the geopolitical shifts that we spoke about earlier. But there's so many different applications, use cases that we can use crypto for. And the addressable market for what smart contracts can do can be measured in hundreds of trillions of dollars. So there's a significant like space for appreciation here, and store of value is just one niche application of this. And again, comparing with the internet, is like back in the 90s, the only thing that people talked about with the internet was the email. Was the only application that people thought the internet was for. People thought that the internet and email was the same thing. Just right now, if you look at traditional investors, they think that Bitcoin and crypto is almost like it's all the same thing. They're all currencies, you know, and they think it's all the same thing, but they're completely different. So it's really like it's too early to pick the winners. This is a space that's going to grow exponentially in the coming years. So if you're looking for exposure, if you want to capture the space, you need to look at this in a diversified way. So that's the core of our thesis. This is really about risk mitigation. So if you want to get the best possible performance, you need to take more risk. right? So if you want to make a specific call that Bitcoin is going to outperform all assets, or there's a specific cryptocurrency that's going to outperform, then you need to take more risk. And an index approach is exactly about risk mitigation. You're not going to like get the performance of the best performing assets, but you're making sure that you get the broad exposure that give you access over time to the best performing thesis and the best performing assets. So it's really like a risk mitigation, a way to get a broad exposure to the market. This is really common for traditional investors. They're used to investing in indices. That's the core of their allocation is passive.
Yeah,
exactly. So it's the core of the allocation is passive. And that's how we think that the allocation in crypto should start. You should start with a passive exposure to a benchmark index like the Nasdaq Crypto Index. And then as you build conviction, you can, calibrate, you can, tilt your positions on top of this index.
Yeah. For me, my index, my position is like most people should just stick with Bitcoin. And if you're into investing, if you understand how to invest, how to trade, and you understand the markets, then you could take a portion of that and go into other coins as well. And maybe do like 50% Bitcoin or 75% Bitcoin, and then have 50 or 25% in other altcoins as well. Just because over time we've seen, at least right now, that even though during short periods of time altcoins can outperform and do outperform Bitcoin, over the long period they've always ended up crashing down even further. Or another strategy would be to have a diversified portfolio of everything, like 10% into everything, and then whenever that season does come where the altcoins do outperform, sell all of that and go into Bitcoin, and then just begin the dollar cost average back to everything else, or just wait and then play the market.
Exactly. That's a very valid strategy, especially if you're active in crypto. Like if you're really tracking the space and you want to get it. 99% of the investors, crypto is a very small allocation in their portfolio. And this is like what we've been preaching to traditional investors, is just look for a small allocation from 1 to 5% for the long run. And for those investors, it's not worth their time trying to calibrate exactly how much of each currency they should have. And then you need to review this over time, right? So you need to make sure that every 3 months or 6 months you're reviewing that, because markets are changing.
Every week.
So that's why, exactly. So that's why just doing a market cap weighting, you let the markets play that for you. So right now it would be 75% Bitcoin, 25% of other assets, which is like around what we mentioned, right? And over time, if the smart contract platforms thesis evolve, this is probably going to become a more significant part of a market cap weighted portfolio. And then probably if that happens, you're going to change your approach as well. And you're going to say, hey, like those things are not tested out and they're working, and maybe you should have more of your portfolio. So this is really the struggle between passive and active, and really depends on how much time you have to invest in. For most of the investors, they don't have this time to invest into crypto, right? They're doing their jobs, they have their day-to-day lives to take care of.
Yeah. Sometimes I think sometimes I forget about that, because I'm literally watching crypto 24/7.
Me too.
For the past 7-8 years now, nonstop. Exactly. Like it's just been.
It's the same thing for me, Luis. So yeah, sometimes you need to take a step back. It happens to me all the time.
And there's people like outside of crypto. I don't.
Yeah, exactly.
Yeah. Okay.
What they do, right?
Yeah,
all the interesting things are happening in crypto, right?
I know crypto and AI now.
Yeah, exactly.
I would like to get into AI. I think it's fascinating.
Fascinating.
Is there any well, speaking about how there's like normies or people outside of crypto, what are some misconceptions that both retail and also on the institutional side, people and investors are have shown some of the biggest misconceptions when it comes to crypto that you've seen?
The biggest one is they think there's all this, like they're all currencies and they're all the same thing. So they're all variations of Bitcoin. I think this is a huge misconception, because
so people really think that that's smart people with a lot of money that
they still think that this is all digital currencies, and And they're starting to appreciate Bitcoin, especially now with gold, with like gold prices going up and all the changes. They're starting to understand Bitcoin, but they still haven't like I think there's a long way to understanding what smart contracts are about and what you can build on top of smart contracts.
Wow. Well, you're the first person that I've interviewed or in a while or talked to at all in a while who I'm getting the sense of we're still early. Like we're still like even though it might not.
We're very, very early.
Yeah. Wow. Amazing. All right. Let me see if there's maybe a few more. I could pick one or two more questions for you. You know, speaking of AI, on AI and technology in the future, how do you see AI and crypto intersecting?
So I think they reinforce each other, because if you think about it, like once we start to have AI agents doing things for us, those AI agents, they will not use credit cards. They will not use the like cash dollar bills, right? They need to have sovereignty. They need to have their digital wallets, and they're going to transact with smart contracts, stable coins, and all the things. So they need to interact with each other, and they need to set up contracts. They're not going to sign this using DocuSign. They're going to use smart contracts and digital signatures. So I think this is like blockchain is the financial layer for AI.
Wow. You know, honestly, this is like getting me excited again. You know, like being in crypto. I'm getting texts and emails every single day saying my Coinbase 2FA is down and my withdrawal has been good, and it's all scammers. And it's like it's getting me like what's going on with this space over here? You know, I'm not losing faith, but like it's getting to be annoying. And I'm glad we're talking about stuff that's actually going to be happening in the future. That's exciting. You know, that brings some more excitement to the space. And yeah, I guess do you have any like I think the smart contracts are what you're most excited about, you know, in the blockchain, just from what, you know, we've talked about, because I was going to ask what you're most excited about, like technologically speaking, but it has to be the smart contracts and what.
Yeah, this is what I said, Luis. Like, I mean, the path that I'm seeing here towards stablecoin adoptions makes me super excited about this space and super excited about smart contract platforms and about DeFi, right? Because I think like the one thing that's missing for DeFi right now is real assets, right? There like there's gotta be a real economy that's not just based on meme coins, right? Meme coins, for me, like meme coins are testing grounds. Like we're using those and that's good. Like some people are getting reward for this, but we're using meme coins to test out the pipes of DeFi. But we need real assets, and real assets are coming once we start to see stable coins being adopted by traditional financial institutions. So this is what makes me most excited about crypto right now.
Amazing. All right, so I got two closing questions for you. One is what is the one thing that you believe about the future of crypto that few others do?
The one thing I believe about the future of crypto?
Yeah, that maybe a lot of other people don't believe.
Yeah, so it depends, like, who are the people we're talking about, right? If we talk about the people that we speak, like at Hashdex, we speak on a day-to-day basis, we're talking with traditional investors, like, crypto is going to, like, we're going to be using this on a day-to-day. We're not even going to call it crypto in 10 years from now. It's just going to be, like, you know, our assets, like the financial system. And I think this is, like, people don't realize that yet.
Wow. All right. And then the last one was, do you have any advice that you would give someone looking to build a crypto-focused investment firm?
Crypto-focused investment firm. I would say you need to have vision. This is a long-term investment opportunity. It takes some time, you know, and really, like, you need to have this long-term vision at play. And one of the things that, like, it's really common in crypto is to see people with short-term vision and wanting to get rich fast, wanting to, you know, make progress fast, and they end up taking shortcuts. And this never ends well. We saw that in 2022. We saw that in 2018. We saw that in 2050. Like, it happens over and over and over, and it's going to happen again. Like, people are looking for short-term gains. and looking to take shortcuts. And one of the things that we're very proud here at Hashdex is not taking shortcuts. You know, we're playing the long-term game. This is the hard game to play, but it's the right one to play.
Yeah, dude, love it. Well, I'm pumped up. You got me excited about crypto again. Thanks, I appreciate that. And yeah, I guess for anyone outside the US, check out Hashdex. And for people that are inside the US, check it out. But I think the real time to get in is when there's going to be for people in the US is when there's a lot more of the regulation happening and more cryptos could go in. But yeah, man, this was a good interview. So I appreciate you hopping on, and you know, maybe we'll talk again soon.
Yeah, thank you, Luis. It was a great conversation.
Awesome.
Let's keep talking. Thank you.
All right, appreciate it, man. I will end this and we'll be good to go.